Good morning, everyone. Today, we will learn about group audit. Group audit is the audit of group financial statements that include the financial information of more than one component. First, the introduction of group audit. Companies frequently have subsidiary companies. Holding company is required to prepare group account in the form of consolidated accounts. Auditor for the holding company is required to express an opinion as to whether the group account show a true and fair view to the members of the holding company. In auditing group accounts, auditor is required to possess an appropriate knowledge about accounting, regulations and standards. As refers to Companies Act 2016, the group account stated in M.F.R.S.127 and M.F.R.S.128. Who is principal auditor? What are components? And, who is the another auditor? Principal auditor is the auditor with responsibility for reporting on the financial statements of an entity where those financial statements include financial information of one or more components audited by another auditor. Components means a division, branch, subsidiary, joint venture, associated company or other entity whose financial information included in the financial statements. Another auditor is an auditor, other than principal auditor, with responsibility for reporting on the financial information of a component which included in the financial statement audited by principal auditor. Auditor is responsible to perform the audit and give opinion on the consolidation account. Rights of principal auditor are access to the accounting and other records of the company and any subsidiary of the company, require from any other auditor of related company for any information and explanations required for the audit, and require from any officer of the parent company and the officer of the related company to get the information and explanations required for the audit. If the same auditor for the holding and subsidiary being appointed, the audit need not to have separate engagement letter but must get the confirmation from board of directors of each company. In order to accept the appointment, the principal auditor should consider the materiality of the financial statements which the principal auditor audit. Besides, the principal auditor's knowledge of the business of the component and risk of material misstatement in the financial statement of the component audited by other auditors also need to be considered. Other than that, the extent of the additional audit procedures by principal auditor and competency of other auditors should be considered too. In terms of using the work of other auditors, when the principal auditor uses the work of another auditor, the principal auditor should determine how work of the other auditor will affect the audit. The principal auditor should lead the planning, especially the timing of the group audit, the specific risk area and audit procedures, and intercompany balances. The principal auditor is also to discuss with other auditor to synchronize the audit work. The other auditor should cooperate with the principal auditor. For example, to advise principal auditor for any significant event that may have an important impact on the audit of consolidated financial statements. For the procedures of principal auditors, the scope of work of the principal auditor is depending on the scope of work of other auditor. In terms of the terms of engagement of other auditors, any limitation, standard of work and independence of other auditor. Besides, it depends on any problem encounter in the past and any significant changes of component condition, business and profitability. It also depends on the materiality of component compared to group as a whole. Misstatement in a component may not be material for the group as a whole. Other than that, it depends on the inherent risk assessment of subsidiaries by the principal auditors. There are 4 procedures of principal auditors: preliminary stage, detailed audit work, questionnaires and review of other auditors' working papers. Preliminary stage is to obtain and prepare schedule of investment in subsidiary. Detailed audit work is checking the consolidation figure. Questionnaires is given to other auditor which includes some confirmations. Review of other auditors' working papers, if necessary. It is to ensure certain things. For preliminary stage, it includes the opening balance of investment in subsidiary, additional or disposal of investment and verify to minutes and other document, ending balance, check accounting treatment for gain or loss on disposal of disposal, confirmation the existence and ownership of investment and obtained audited account or management financial statement of each component. For detailed audit work, It includes goodwill or reverse arising on consolidation, pre- and post-acquisition reserve, overall reconciliation and movement, calculation of minority interest, agreement of intercompany balances, adjustment and cancellation of intercompany transaction and balances, proper use of foreign currency rate for translation and make sure properly disclosure the necessary items, related party transaction, company level and group level. For questionnaires, it includes confirmation regarding the internal control of subsidiaries, basis of accounting policies, balance sheet items, profit and loss items, exceptional transaction involved director and general matter, any limitation of scope facing by other auditor and any qualifications and the reasons for them. For a few of other auditors' working papers, it is to ensure the system examination and documentation of auditor is appropriate. Test of control and substantive test have been properly carried out. Working paper is comprehensive. Review process of working paper has properly been done. The financial statement follow accounting standard. Auditing carried accordance to approved auditing standards. Adequate evidence obtained as a basis to form an opinion and to identify the intergroup transaction. For the every finding by other auditor, principal auditor should further discuss with management of the component as well as other auditor. If necessary, to perform additional test by the other auditor or principal auditor to satisfy themselves about the issues. For every finding, the principal should properly document the financial statement of the components, significance of the finding to the entity as a whole, names of other auditors and audit procedures performed and conclusions reached of each findings. Difficulties of principal auditors. The possible difficulties the principal auditor may face in respect of audit of foreign subsidiaries are in terms of language, culture, and differences in accounting and auditing conventions and legislations. Next, the responsibilities of the principal auditor is to report the names of subsidiaries of which he has not acted as auditors, whether the consolidated accounts reflect a true and fair view of the group's financial performance and position, whether he is satisfied that the account of the subsidiaries that are consolidated are in the form and content appropriate and proper for the preparation of the consolidated accounts, whether he has received satisfactory information and explanations as required, and whether the auditor's report on the accounts of any subsidiary was made subject to any qualification. In terms of report considerations, the reports by principal auditors are either unqualified and qualified report. For qualified report, when principal auditor concludes that the work of the other auditor cannot be used and the principal auditor has not been able to perform sufficient additional procedures regarding the financial information of the component, the principal auditor should express the qualified opinion, if it is not so material and not pervasive, or disclaimer, if material and pervasive. If other auditor issued qualified report on the component, principal auditor should consider the significance towards the whole group, where if there is immaterial effect to the group, principal auditor may express unqualified opinion. If it is not so material effect to the group and not pervasive, principal auditor may express qualified opinion. If there is significance effect to the group and pervasive, principal auditor may express disclaimer, which is the limitation of scope, or adverse, which refers to the disagreement.
Next is about related party. Related party can be the one that controls or are controlled by the reporting entity as parent and subsidiary. Auditors have to be alert for related party transactions. They must be identified related party during the planning phase of auditing. The examples for related party transactions as could be in leasing of property of any kind and could be in sale or purchase or supply of any goods or material. These related party transactions must be disclosed properly. The group can be formed differently. If it is the intro group, its transactions should be eliminated. However, if there is only show the parent's transactions, should not be disclosed that as the accounts be well presented with the consolidated accounts. Goodwill on consolidation. The group audit's understanding of the consolidation may be included the matter that relating to the consolidation process and adjustment. The policies are described in the Financial Reporting Procedures Manual and issued by Group Management. As example, Group of Audit should take steps to make sure the procedures for amortizing goodwill and impairment testing of goodwill in accordance with the applicable financial reporting framework. Letter of support. This letter of support could be formed when the subsidiary is not going concern. Basically, this letter is from the parent which to be sent as the intention to support the subsidiary's condition financially. It can be kept as evidence, however, this support can be proceeded if the resources from parent are available and sufficient to be shared.
AI 600, using the work of other auditors. When the principal auditor uses the work of another auditor, the principal auditor should determine how work of the other auditor will affect the audit. The principal auditor should lead the planning, especially the timing of the group audit, the specific risk area and audit procedures, etc. The other auditor should cooperate with the principal auditor. As an example, to advise principal auditor for any significant event that may have an important impact on the audit of consolidated financial statements. The principal auditor need to satisfy that all material areas of the financial statements of the subsidiaries have been audited. The principal auditors would advise the other auditor about the independent requirements and obtain from the other auditors a written representation that they have complied with independence issues. The principal auditor would inform the other auditor of matters such as areas requiring special consideration and procedures for identification of intercompany transaction for disclosure. Principal auditor must review the audit procedures applied, review written representation and working paper of other auditor. Once reliability of the work carried out by the other auditor is in question, the principal auditor should perform a detailed review of the other auditor's working paper and pay attention on : existence of proper documentation of audit work carried out by the other auditor, adequacy of the audit programs, scope of work covered by the other auditor, whether appropriate test of control and substantive procedures have been performed. If principal auditor not satisfied with the working paper, the principal auditor might request the other auditor to perform the supplementary tests, or alternatively, the principal auditor might need to perform the test. Next, AI 610, considering the work of internal auditing. Internal auditing defined as an appraisal activity established within an entity as a service to entity. Its function include, among other things, examination, evaluating and monitor the adequacy and effectiveness of the accounting and internal control systems. The external auditor should consider the activities of internal auditor and their effect, if any, on external audit procedures. The scope and objective of internal auditing vary widely and depend on the size and structure of the entity and the requirement of its management, among others. 1. Review of the economy, efficiency and effectiveness of operations including non-financial control of an entity. 2. Review of compliance with laws and regulations and other external requirements and with management policies and directives and other internal requirements. 3. The establishment of adequate accounting and internal control systems is the responsible of management, which demands proper attention on a continuous basis. 4. This include review of the means used to identify, measure, classify and report such information and specific inquiry into individual items including detailed testing of transactions, balances and procedures. An external auditor may review the work of an internal auditor. Internal auditor would be able to advise the external auditor on important issues, so that the external auditor can be more focused on their job. During the planning stage, the external auditor should first of all understand the internal auditor's scope of work, function and objectives. The external auditor's preliminary assessment of the internal auditor function will influence the external auditor's judgment about the nature, timing and extent of the external audit procedures. The external auditor, in order to accept the work of internal auditor, should evaluate the internal auditor in terms of: 1. Technical competence. The skill and expertise of the internal auditor. 2. Professional due care. The process of internal audit with due care such as proper plan and supervision. 3. Scope of work. Audit evidence obtained is sufficient and appropriate for external auditor to form an opinion. 4. The documentation on planning of internal auditor. 5. Sample size selected by internal auditor. Lastly, AI 620 using the work of an expert. Expert means a person possess special skill, knowledge and experience in a particular field other than accounting and auditing. As auditor, there are times for certain assertions requires an expert opinion and involvement. For example, the measurement of work completed and to be completed on contracts is progress and legal opinion concerning interpretations of agreement, status and regulations. An expert may be engaged by the entity, engaged by the auditor, employed by the entity and employed by auditor. When determining the need to use the work of an expert, auditor will consider: 1. The materiality of the financial statement item being considered, for example the materiality of underground mineral. 2. The risk of misstatement based on the nature and complexity of the matter being considered, and 3. The quantity and quality of other audit evidence available. Procedures to be performed or consideration by the auditor. 1. To ensure that the expert is professional competent to take up the engagement, such as have a license, experience and reputation. 2. To assess the objectivity of the expert. The objectivity of the expert will be impaired when the expert is employed by entity or related to the company in other manner. In this case, auditor may need to undertake additional audit procedures. 3. The auditor need to consider: A. The objective of involving the work of an expert. B. The scope of work of the expert's work. The expert is needed just to give auditor the quantities of mineral underground but not for market value. C. The assumption and method used by the expert. The auditor should have some general knowledge about the assumption and method used. For example, on valuation of land. 4. The auditor of course does not have the same expertise and knowledge with the expert. However, based on knowledge and experience should go for appropriateness and reasonableness of assumption and method by the expert and figures reported. 5. The auditor should assess the appropriateness of the expert's work as audit evidence regarding the financial statement assertion being considered for as a basis of opinion. If an expert does not provide sufficient audit evidence to resolve, the auditor may: discuss again with management and the expert. Applying additional procedures including engaging another expert, if required. If still unresolved, the auditor may modify the audit report: unqualified opinion with emphasis of matter on the methodology adopted by the expert is uncommon and the auditor is unable to make comparison on the results reported by the expert, or auditor may issue a qualified report due to lack of audit evidence or disagreement.